Hello everyone, once again. Thank you for joining our webinar. Just please once again confirm that you can hear, that you all can hear my voice and see my slide here. Okay, perfect. So welcome once again to Live Market Analysis. I will do the covering. So we will take a look on different markets from the FX to also to stocks and some commodities that I see them very interesting for myself. So actually what we will cover today, I will take a look on Aussie dollar and potential bearish and bullish scenarios. Depends on the S&P. Okay, as you know, the Aussie dollar is trading usually in the same direction as the S&P, so we will take a look on that part. Firstly, we will cover the S&P, then also I will take a look on the euro dollar and potential bullish scenario if the S&P will break higher. Then dollar yen also could be very interesting in this week. Cable, very bullish, I will cover this one as well. Crude oil, we'll also look on this market, and then also gold and commodities like copper and sugar. Okay, so firstly, as you said, we will start with the S&P. It depends on which direction market will go. Then we will try to take advantage of this move in the FX. Okay, so I will take a look now on the S&P. Now here on the S&P, as you know, the market is bullish, but the short-term waves are not so clear. We can see ranges here. Here you can see that we are in a range. I'm looking for two wave counts. But before we go to these short-term wave counts, I really want to highlight this structure here on a daily level, where I can count 5 waves up. So I'm looking for corrective reversal down in this blue wave 4. Okay, ideally, as you know, the blue wave 4 will retrace back to the former wave 4, similar like it happened here back in February. At the start of February, we have seen a pullback back to the former wave 4. Even this wave 4 retraced back to the former wave 4. So I'm looking for something similar here. I'm expecting a corrective retracement, but I'm not sure if this will occur immediately from current levels or from higher levels. Okay, but I'm ready for this correction, and I think that there will be better swings and wave structure to join this uptrend on the S&P 500. So on the short term, I'm looking for two wave counts from a trading perspective. The first one is that we will see an ABC move to the downside. Okay, now this is a triangle placed in a wave B, and as you know, if this is a triangle, then we need 5 waves. This is A, B, C, D, and E. So I'm looking for a push down into wave C after I will be able to count 5 subwaves. For now, that's still not the case. Okay, but if we will get this wave C down, if we'll see some impulsive reaction to the downside, then I think that the US dollar will recover also against the Australian dollar, which has been very strong lately. And the second wave count, which is the opposite from this one, is actually also a triangle, but it suggests that the whole pattern, the whole pullback from these highs is a triangle. Okay, so on that count, I would turn bearish on the US dollar, and I would confirm my bullish view on the euro dollar. Okay, so I hope you get the idea. We are tracking 2 wave counts, and I will try to filter once one of the wave counts will be completed or confirmed. I will try to take advantage of this on the FX. Okay, which means if we will see a pullback here and then a break to the upside above this wave D or above this trend line, then this will be a nice bullish confirmation. So I would look for euro dollar long opportunity. Okay, but for now we will focus on this one, on the bearish view. Okay, because I think that Aussie dollar moved into some significant Fibonacci resistance levels. So we will take a look on the Aussie dollar in the context of this bearish count on the S&P. Okay, so on Aussie dollar, I'm looking here at the daily chart. You can see that I can count here 5 waves to the downside. Okay, waves 1, 2, extended wave 3, wave 4, and wave 5. And this rally is still only 3 waves. We are approaching this 61.8% retracement area. Okay, so this can be a corrective rally. Okay, which means that I am paying a close attention to evidences for a bearish confirmation. So in other words, if we will see a reversal to the downside, if the S&P will break those lows of current range, swing lows, then I think that this Aussie dollar could get on a bearish track. Okay, so I will be looking at this market very closely, paying a close attention to an impulsive sell-off, and if I will get a retracement back into this triangle region, then definitely I will be looking to short a pullback. Now here on the 4-hour chart, you can see that I labeled a running triangle A, B, C, D, and E. So we already met this target from a triangle measurement. This was the widest leg here, as you can see, and I put this projection from here. And you can see that we are at this resistance 61.8. It's a little bit higher, so we could be here in a reversal zone, maybe not just yet, maybe from the mid of the week. Okay, so definitely it's my pair on the radar for shorts if we will get an impulsive sell-off. Okay, so we will pay a very close attention to this if the S&P will also break to the downside. Now someone said the wave 5 at the bottom looked like a free wave. Yes, and I actually counted this move as a part of a flat correction. Let's say this could be wave A, B, and I was looking for a wave C. So even if you consider this is a free wave move, it should be part of a correction, which means that even in that case, the Aussie dollar could turn bearish. Okay, so I will not bother you with this free wave structure because at this stage I don't think it's important. Okay, so this is for Aussie dollar. I am waiting, as I said, on the S&P bearish confirmation. If we will not get this bearish breakdown on the S&P, then of course I will stay bullish on Aussie dollar. So I'm also tracking discount, which suggests that this is a 5-wave rally in wave 1. This was a wave 2 flat correction, and we are going higher. So for discount to be interesting for my longs, I would definitely need a very strong push from current levels to the upside to make this wave 3 a little bit more extended, and then I would pay attention to wave 4 for longs. But of course, the S&P should then also break to the upside out of a triangle. Okay, so the S&P should be our vehicle to know in which direction we should trade. At the moment, the S&P is moving sideways. Okay, I also have here interesting chart, which is an overlay chart, actually of. Is this chart big enough, or you need a bigger? Just let me take a look how this will full screen. Okay, so actually we will take a look now on DAX compared to the S&P and the euro dollar, and I will take a look from March 10. Okay, you can see that on March 10th, German DAX found the lows, the S&P moved even lower, or I should say sideways, the euro dollar as well. Okay, so German DAX, European stocks are higher, and I'm just wondering if the maybe German DAX is at the resistance, and we will see maybe a turn to the downside, and those two markets, the S&P and the euro dollar, will fall, or maybe will this move extend even higher, and those markets will maybe catch the German DAX. Okay, so what is my point here is that if we will see a break higher on the S&P, which means if the S&P will join German DAX, then I think euro dollar could, which is in black, could also be a very interesting for long. Okay, so I will take a look on euro dollar from a bullish perspective on stocks. Okay, here is euro dollar. Firstly, let me take a look on the weekly. Daily is a mess. So on the weekly, we are looking for this wave E. The top is still not confirmed, so I will definitely stay with the current sentiment. So on the 4-hour chart, I labeled a pullback as a WXY, or double correction, double zigzag, ABC, X, ABC. Okay, so here my view is bullish. I was looking for my members for a fall to 137 level, and today I was looking for a bounce, and so far this is playing out very nicely. But we need something from the S&P. The S&P is moving sideways, and as I said, maybe that bullish triangle will prove correct, and break to the upside will definitely send the euro dollar even higher. So this wave count is also very interesting, and let's assume that this is blue wave 1, wave 2. So if you think we're in wave 3, then this leg should be an extended. Definitely you need to keep an eye on this 138.43 level, and maybe even better this wave X swing high. So if we get to these levels, then maybe buying a pullback would not be a bad idea. Okay, back towards the line. So this is a very interesting bullish count. So as I said, if the S&P will break to the upside and join the European stocks, German DAX, then I will be tracking this one for longs. Okay, because I think it's pretty interesting, and definitely you want to stay with the trend. Okay, you always, when you label the wave count, try to label the wave count so that you stay with the trend. Okay, and if you consider this chart, we have still higher lows and higher highs. So definitely this market is still in uptrend, even if very slow. Okay, so I think that we definitely need to consider this bullish scenario. Okay, I also have here one alternate count for the euro dollar. Now it's an ending diagonal still in progress. Also this would then be a wave 4 and looking for a push up in a wave 5. Okay, so even this wave count suggests that euro dollar will continue to the upside. Okay, what would have to happen that I would turn bearish on euro dollar? Well, the S&P should break to the downside significantly through the past week lows, and at the same time this wave count needs to get clearer. Okay, at the moment I do not see this wave count clear. That's why I mentioned that if the S&P will move to the downside, I will rather focus on Aussie dollar shorts than on euro dollar, because their structure is very clear, and especially if we get that impulsive sell-off. Okay, so hello from Germany. Hello everyone who joined us a little bit late. So yes, we will take a look on cable. Now cable, if you were also our viewer of the webinars from the past 2 weeks, then you know that I was constantly looking for cable for a bullish reversal. So this cable is clearly an uptrend. Weekly chart. Here we are in a wave C. I'm looking for a move above this wave A. Minimum expectations, as you know, wave C should move beyond this level. So on a daily, I'm looking for an incomplete impulsive rise, but we could be running in the final stages here of a wave 5. I'm looking for an expanding diagonal here. In our past videos, I had a different wave count. I actually labeled wave 3 here and wave 4 here, and I was looking this for wave 1, wave 2, and was expecting a break higher into wave 3 or 5. Okay, however, I decided to rework the wave count because I want to focus on my minimum expectations, which is a new high. Okay, so in both cases, we expect more upside on cable, but with more limited gains on this wave count. So I will go with discount, looking for upside, more upside here. Now this is a very interesting labeling. Here I labeled ABC, another ABC up in wave X, and this decline is very important. Again, it unfolded in 3 waves. You can see that market last week broke to the upside out of this downward channel. More importantly, this downward channel turned into a support here. Okay, we are also trading very close to this wave B, which was running flat. So I'm definitely looking for more upside on cable. I just hope we will get a pullback. I will be seeking for longs on lower levels. I need this wave 2. Now if we compare the previous corrective legs, okay, now this was one correction, it was 75 pips. This one again 80 pips. This one 85 pips. So we can assume that wave 2 will be something similar. Okay, so that's why I'm looking back for a pullback towards 1.6570, maybe 50, which was here, this strong bullish candle. Now on the 1 hour chart, the wave count is even clearer. I can count 5 waves to the upside. Waves 1, 2, 1, 2, 3, 4, 5, which makes an extended wave 3. And this is probably wave 5. Now you can see that momentum volume is very slow here. So I suspect that we are either in the final stages of wave 5 or this was a wave 4 triangle. However, after a wave 4 triangle, market will move to the upside into the final leg of the pattern, because triangles occur prior to the final leg in the larger pattern, which means that in either case, I think that we will get this 3-wave retracement. So I would pay attention to 2 levels. First is this first swing low, which is 50 pips lower, and then second is a 100 pips lower. Okay, so if we'll get a retracement at current levels, then I would definitely looking for a little bit deeper retracement. Second. Now usually I'm looking for a pullback of 38.2 as minimum objective, okay, on retracements. So 50 and 61, these are ideal targets. So this would definitely be more interesting zone if we'll get a reversal at current levels, okay. If we'll get from a little bit higher levels, let's assume that this wave B will be spiked out and then a pullback. In that case, I would be looking on this wave 4 as a nice swing zone, okay. So discount definitely very, very interesting. Any questions on cable? If not, then we will continue. No, just a second. Okay, so cable definitely on my radar for longs. Now here's also interesting. You can see swing low here and here. So if we connect and respect those swing lows, then this could be a new base for a coming corrective retracement. Okay, so I will be looking for longs and pullback, but stops mine will be at the lows here. Okay. Okay, so that's for cable. I will also now take a look on dollar yen. Now I was expecting to see lower dollar yen in the last few weeks. We didn't get it, and you can see the market is moving sideways here. Actually, it's bullish now, but still we are trapped in a range, in 300 pip range. So a triangle could be the case, because clearly this leg to the upside unfolded in 3 legs, so it probably belongs to a larger incomplete pattern. I'm looking at this triangle as my favorite idea. and could be interesting for shorts this pair if we will reverse from current levels in impulsive fashion back to this wave X. Now then this would be confirmed corrective rally, and in that case I would be shorting on pullbacks. The reason why I am bearish here, or expecting a bearish reversal on dollar yen, is Nikkei futures. Just let me check this market. Just confirm please, I got a message that voice or sound is not so very clean. So can you confirm if others can hear me fine? Okay, sound is good. Okay, perfect. So then someone else is having any issues. Okay. So on Nikkei, the reason why I'm bearish on dollar yen, expecting potential more weakness there and waiting on impulsive sell-off, is this market. Okay, you can see that we had unfolded in 3 waves here. We fell out of this corrective channel. We are now with 3 waves at 61.8% retracement level, and also at this trend line, okay, lower side of this corrective channel. So broken trend line will ideally become a resistance here, and a decline, a reversal in prices, this would be nice. And because dollar yen, as you can see here on the right, markets very tightly together here, so if we will get a reversal to the downside on Nikkei, dollar yen will also move to the downside. I'm still not sure if that's a triangle. We definitely have to see a reversal very soon. If that's wave C, because we are already now 61.8%. So hope we will hold this level. Now, even if we see a spike above 103.74, then obviously this would not be a triangle, but that doesn't mean that dollar yen has turned bullish. Okay, the wave count would be just adjusted, but still bearish. Okay, so definitely dollar yen could be interesting. Now, what we will take a look now. Any questions regarding dollar yen? Just let me check yields here. So you can see here I have US yields. This was a very strong fall. This is going sideways, so this is telling me that we will see a break to the downside. Now, this maybe can also be a triangle, but even in that case, you will see some reversal down from 28.50, maybe 29 level. Okay. So definitely I am looking for move down on dollar yen. Okay. You just sold cable. Okay. Now, from my perspective, let me check cable. Now, from my perspective, selling cable, even if I'm expecting a three-way retracement, is definitely not one of my favorite setups, because you are still trading against the current sentiment, which is bullish clearly since this rally unfolded in 5 waves. So rather than waiting and praying for lower levels, if you're short, I would personally stay aside and wait on a pullback if we get it for longs. Okay, now if you are maybe some of you swing trader focusing on longer time frames, then you don't care about this pullback. Then some traders, investors will go long or maybe buy pound or ETFs at market and then just add to the position if they will get a pullback or not. Okay, so shorts, from my perspective, definitely I don't see them interesting. Okay, but that's just my approach to trading. So everyone have to figure your trading styles for yourself. Okay, but if sometimes I see a nice setup for against the larger trend, but I need impulsive sell-off. Okay, for example, here market was bullish. If I was expecting a reversal, I didn't sell here or here. I just waited on a retracement and then maybe sell a pullback against the swing high. Okay, in that case you will minimize your risk and definitely you will not be trying to catch a tick high. Okay, but in that case, if you are, let's focus once again on this example. If you wait on a sell-off and then want to to wait on a pullbacks for shorts, because larger trend was up, maybe this setup should be with lower risk than this setup where you are bullish with the larger trend which is already up. Okay, so it's all about the risk. Okay, so maybe we can continue with the agenda. Yes, I absolutely agree. We covered dollar yen, cable, now also crude oil. This one was doing very, very well lately. Now, on daily, we called a reversal here. Actually, we called a reversal here after 5 waves of decline. Crude oil turned nicely to the upside, but after 5 waves, market reversed to the downside in the 3 waves. So I label this as a wave B. Maybe it was too sharp for someone, but I still want to stay with the sentiment, with the current sentiment, which is somehow bullish on crude oil lately. So I was looking for a reversal here after a break out of this downward channel. Was telling our members that we will get a minimum 3-wave rise. Okay, because I was tracking actually 2 wave counts. The first wave count suggested a move to the upside into wave 3, which could be unfolding now. But the second wave count was actually a bearish one. Okay, but even this one suggested a move to the upside into wave C. Okay, and I was looking for a move back above $100 per barrel and one towards this 61.8% retracement. Okay, but I'm still bullish on crude oil. Now I'm tracking here 1 hour count. You can see that from this swing low, I'm looking at incomplete 5-wave move, wave 1, wave 2, extended wave 3, and this to me is overlapping, not very impulsive. Okay, we are also at former wave 4 here, so I'm probably we will see a bounce here in the next 24 hours. At least I'm expecting a bounce. Okay, now for intraday traders, they should focus on this swing high. Let's assume that this is maybe wave B. If this was wave A, just a second, wave A, wave B, and if we are now in a wave C, then this breakout could send this wave 5 to a new high towards 161.8% extension of this wave 1. Okay, so crude oil for me is still bullish on the intraday chart, and this is our critical level, 100.23. Okay, if we will see strong move to the downside, no worries, we already have an alternate scenarios. So if we'll see something like this, okay, strong move to the downside with a daily close somewhere in this wave B region, then this would be an overlapping price action with these swings. In such case, this would be considered as a finished 3-wave rally, so then I would be focusing on more downside and I would immediately turn bearish and look for shorts against this swing high. Okay, so it's always very important to have an alternate scenarios in play. Now, even if someone is long now, I think that if we would see a move to the downside and this client would be stopped out, even then, I'm sure that we will catch something to the downside, okay, and to recover those losses. So it's very important to have an alternate scenarios on crude oil. Okay, any questions for crude oil? Okay, so now we said that we will also, unbelievable how time is going fast. It's already 30 minutes. Okay, so gold. Okay, bearish confirmation, and we will also take a look on silver. So gold, daily chart, I'm looking for a wave 4 triangle. I was looking for a reversal from 78.6 and we got it. Very strong move to the downside through this lower trend line. So this leg is probably part of a wave D of this triangle A, B, C, D, and E. So definitely I am bearish. Actually, I will move this critical region here for the short term. Okay, as long as this level holds, I'm looking down on crude oil and I'm ready to go short on pullback. Okay, now here on the 4-hour chart, I'm still not sure if this wave A already found a low here, or we will see more downside. Definitely staying with the current sentiment is the best approach. So we could see a new low here, but from a trading perspective, especially for swing traders, I will pay attention to this wave B. A free wave rally, either from current levels or from a new low, could be a very nice for shorts. Okay, I'm looking for a resistance back from this triangle zone, which is 1327. Actually, it's from 1320 to 1336. Okay, this is the level with a lot of swings, as you can see here. So maybe this zone will react similar here in the downtrend, also for a reversal. So gold on my radar for shorts, but not from here. I'm waiting on wave B. Okay. And silver, to confirm the larger bearish view. Where is silver? Okay, here. So silver here on a weekly, clearly trend is down. Lower swing highs, lower swing lows. So I'm looking to the downside. Now we are sideways here, also in a triangle. It seems this is A, B, C. I'm looking now for a wave D. We could test this trend line, which will allow gold to move even lower after that wave D. So I'm looking for more downside here on silver, and from a larger perspective, I think we will take these levels out in 2014 this year, and maybe then form a bottom in the second part of this year, maybe in the final quarter. Okay, so silver for the next few months is bearish, but in the longer picture, this could be a buying opportunity around this level, 13, maybe $12. Okay. So that's for silver and gold. We said also that we will take on chopper. If you have any questions, traders, then just please type them in. Just let me find the chopper. Okay. Now here we have we are looking at the ABC X ABC, and now we are at new lows and looking for more downside for wave C towards this swing low back from 2010 on the daily chart. As you know, my followers will know that I was anticipating this wave 4 pullback, going back to this which is actually the trend line of this base channel. Okay, so this breakout was confirmation for wave 3, that we are in wave 3 or were in wave 3, and I was looking for a pullback back towards this trend line for 38.2% compared to wave 3, this extended lag. And also notice that we are now at these lows, swing lows back from mid 2013. So ideally this swing low will now react as a resistance here in this current wave 4. Okay, and I am short on my personal account and hoping on a nice reaction to the downside in this week, and then I will be looking to add to my position at lower levels, and will definitely make tighter stops to swing highs once we get more downside, if we get it, of course. Okay, so chopper definitely bearish, and also interesting is sugar. Okay, anyone trading sugar? Okay, I guess there are a lot of clients from and traders from the United States. There's still an early hour now, so not a lot of viewers from that part of the world. I believe they are trading sugar a lot, commodities. So sugar. Now sugar has turned bullish here at the start of this year with 5 waves. We know that 5-wave move is a direction of a trend. In our case, that is uptrend, and I'm looking for more upside. We have seen a nice retracement in 3 waves back towards this gap. Actually, I'm not sure if there's a gap on other contracts, but this is continuation chart, so maybe that explains the gap here. Anyway, we have seen a nice reversal here in 3 waves. Now here we can see that this wave C can be counted in 5 waves. Was 1, 2, 3, 4, 5, and then we turn to the upside. More importantly, this is a 5-wave move, very strong reaction to the upside. So I think that sugar has turned bullish and the low has been formed here. Also notice that here was again a gap, probably because of another contract. We came from probably from March to April contract. So this was a gap, and I'm looking for a 3-wave fall back towards this region. Always I'm looking for a minimum retracement of 38.2 compared to previous 5-wave rise. Ideally we will see a test at 50% retracement. Notice this was also a broken swing high from a previous downtrend, so this could be a very nice region for a bounce. Okay, I'm looking for a pullback down here and then a bounce. Okay, I'm looking at this market for myself as well. Critical region is this wave C. Okay, so if we also put some fib ratios for this current wave C, okay, then 161 of wave A comes in exactly at this 50%, while this 100% equality level for wave C comes in at this former wave 4. And if we respect this 38.2, which is set, it could be tested. Then if we filter this, then this is my zone of interest. Okay, it's from 70.50, 55 maybe, down to 70.30. Okay, this is my level of interest. Okay. Very interesting charts. Just one question here from a client. Very interesting charts. My only question is, how do you know that the wave counts should be where you have them and not on higher or lower waves? Um, you probably have in mind, let's assume that I just focus on a 4-hour chart and not on a daily chart. Okay, if that's what's your question, yes, usually sometimes I will not cover all time frames because I have enough data for trading setup, let's assume, on 4-hour or just 1-hour time frame. Okay, now if we focus just on this chart here on a 30-minute, okay, and if I see 5-wave rise, then my personal interest would be in buying opportunity, okay, and I don't care what the daily chart is doing, okay, but before I will pull a trigger, I will wait on this pullback to unfold in 3 waves, okay. If this because this pullback, once it will unfold in 3 waves, this will be very strong evidence that market made just a correction to the downside. Okay, in different scenarios, if you see a strong reaction to the downside in 5 waves, well, then you know that this previous 5-wave rally belongs to something else. Okay, so from my trading perspective, I think that collecting data from 1-hour or just 4-hour chart is enough, but it depends on your trading approach. Okay, because if you're an intraday trader, swing traders looking just for a trading opportunity and not trying to analyze where the market will go, then just collecting data from intraday charts could be enough. That's for me, okay? So I hope this answers your question. Okay. So actually we covered the euro dollar, okay? So you will be able all to review the webinar because we are recording it, so you will be able to check this later. Webinar should be up in just a few minutes after we close the room, okay? So the S&P 500, we also covered the S&P 500. So once again, I suggest you to check recording later, okay? So actually, I covered all markets that I planned. If we once again go through very quickly, Aussie dollar, I'm tracking bearish wave count if the S&P will break to the downside. I'm looking, as you know, for 2 counts on the S&P, triangle in wave B or a triangle, let's assume that it's in wave 4. So very quickly, okay, so here is bearish triangle. If we this wave C down, then I will be looking for shorts on Aussie dollar. If at the same time I will get that impulsive reversal on the Aussie dollar. Now this is a bullish count. I like this bullish count for euro dollar because euro dollar, as I said, unfolded in a corrective manner here. So more upside with evidences of a wave 3, then I will pay attention to this wave 4 for long opportunity. But at the same time, as I said, S&P need to show us some evidences of an uptrend. Okay, then dollar yen, I said bearish. I'm looking potential bearish scenario because of US yields, where I'm expecting move to the downside, and Nikkei is also now at resistance. So Nikkei resistance, where I have Nikkei. Okay. Actually, I know, yes, I showed Nikkei. Nikkei is at this trend line resistance and around 50 and 61.8%. So this is matching very nicely with dollar yen around 103.20 at the moment. So a reversal down here would confirm bearish case for dollar yen. Of course, this would then be interesting pair for shorts if we get an impulsive weakness. And then also cable. Actually, cable is first on my list, okay? Because This looks corrective, this looks impulsive. We are at the wave B swing high. We went above this trend line, so buying a pullback around these levels, let's assume 50, 60, maybe 100 pips from the highs. Okay, so crude oil, look at two wave counts, bearish and bullish. For now, I'm still bullish because on the intraday chart, as I said, this looks corrective. So I'm looking for a bounce on crude oil. For the short term, towards 261.8%. Gold, we said bearish. I will sell a pre-wave rally. And here is that. What is with these charts? Okay, so this wave B will definitely on my radar screen. And then we had chopper bearish. No. Okay, here I'm looking for a reversal down, and then sugar bullish. Okay, so we had a lot of interesting wave structures on many markets here. Okay, so traders, I really hope that you enjoyed the webinar. We will probably make a new one at the end of this week. If not, then probably another free webinar next week. Maybe I will decide for some regular days and hours so that you will actually exactly know when to attend the webinar. Okay, I still need to make the decisions, but once again, thank you for joining our webinar. Now, if you're new to our services, to our webinar, then keep in mind that we have special offers for new members. For just 1 month, you will get a free access to our full services. Okay, so visit our website and check what we have to offer. If not, that's fine. We still have plenty of free analysis on the website that you can take a look at. Okay, traders, so once again, thank you for joining us, and I will catch you next time. Have a good day.